Hello, everyone, and welcome to another ISG Smart Talk. Today, we will be discussing how to maximize your market knowledge using price trends and service intelligence. Before we get started, I'll quickly run through a few housekeeping notes for you. We are recording this webinar, and you can access the replay using the same link you used to register. So please feel free to share that with any colleagues who couldn't attend today. We will also email you a copy of the presentation deck after the live session. You can submit a question at any time during the webinar to our presenters using the Ask a Question box on the left side of your window. With that, I will go ahead and hand things over to Chris Patacini to kick off today's presentation.
Thank you, everyone, and thank you, Jillian, and good day, everyone, and welcome to our first Price Trends webinar for 2021. Whether you're watching live or in a follow-up stream, we're glad that you've joined us. My name is Chris Patacini, and I'm responsible for our Pro Benchmark platform here at ISG, which provides market price intelligence and benchmarking services for both service providers and our enterprise clients. ISG also uses the platform as we advise enterprise clients throughout the sourcing lifecycle, from upfront strategy and RFP analysis, as well as benchmarking in progress transactions. Our latest offering allows enterprise clients to price monitor their contracts over time as a bolt-on service with our GovernX contract management and governance services. It's this work that allows us to gather insights into the market and in pricing in particular, and to be able to offer you the Pro Benchmark platform, and then generally to provide market price intelligence and trends as we will do today. Following from our last price webinar back in October of 2020, we had a number of registrants ask us to speak on broader trends in the market, and then also on one topic in particular, and that is on other types of benchmarks and other aspects of services, which is why today's session is focused on not just price trends, but also service intelligence. We all know that price is a very important element for your enterprise clients, but the foundation of any service contract is the service itself and ultimately the client satisfaction of that service. So today, bear with me there. So today we have three presenters on three different topics, and I'll introduce each presenter in greater detail. For now, I'll cover topics that they will be covering. First, Stanton Jones will be reviewing the global market trends gathered through the ISG Index. And following that, Andy Sauter will provide insights into IT price trends that we're seeing in the market. And we'll finish out today's session with Howard Davies going beyond price and discussing service trends and intelligence. And again, we asked, we can try to keep this as interactive as possible, and feel free to ask questions throughout the webinar. We'll try to answer as many of those as we can as we go. And also we'll save some time at the end to answer any last questions that folks might have. And as always, we'll be sending out slides at the end of the webinar. So at this time, I'm going to turn it over to Stanton Jones. Stanton, in his role as the lead analyst for the ISG Index Insider, he helps organizations understand how disruptive technologies are transforming IT and business service markets. As an ISG Digital Fellow, I think of Stanton as the rock star of analysts. He's been quoted in CIO Magazine, Forbes, and the Times of London, and has appeared on Fox Business News. So welcome, Stanton.
Thanks, Chris. I'm not sure I've ever been called a rock star before, so I appreciate that. That's fantastic. So hi, everyone, and welcome wherever you are in the world today. I'm thrilled to have you here. So before we jump into the trends and forecasts, as Chris just talked about, Chris asked me to provide some context about what's happening bigger picture in the IT and business services market. So we're going to do that through talking about some data from the index, as Chris just talked about. If you've never attended one of our index calls, an index is the quarterly research program that ISG has been executing for 73 consecutive quarters now. And each quarter we read these results out to the market. Last quarter we had over 2,000 folks on the call, and that's a combination of our enterprise clients, service providers and technology vendors. We have private equity, institutional investors, investment banks that are covering the IT services market. So a really cool blend of attendees that come to this call, but all interested in the performance and growth of the market that we all operate in. So before we jump into some of the data, I wanted to share with you 3 mega trends that we see happening in the market today. Most of the stuff I'll cover on the index is from 2020. These 3 things are really things that are happening over the past several years, and we sort of view these as secular megatrends. So number 1, we're all aware that the number of transactions in the market is increasing. This is great news for all of us. It denotes a healthy market. It's a very competitive market, but as the number of transactions increases, that creates more opportunity for everyone and gives more choice to our enterprise clients. So, for example, if you look just at ITO in 2020, the number of deals increased by 10% year over year. It's also important to note, though, that it's not really just like a peanut butter spread in terms of this growth. Most of that growth in the number of deals came from applications, so AMS and ADM type services. It was actually a 20% decrease in the number of infrastructure-only deals last year. So second key trend is deal sizes decreasing. So again, most of us have seen this pattern in whatever role we play in the market. One of the really interesting ways to look at this data is by looking at the number of billion-dollar deals a year. So these are obviously the really, really big deals that get a lot of publicity in the market, and we've been tracking these for a number of years. So for example, if you look from 1999 to 2006, we averaged $19 billion deals every year. If you go to 2007 to 2014, that came down to $14 billion deals each year. And then from 2015 to 2018, we averaged $8 billion deals each year. So essentially the number of billion-dollar deals has been halved over the past 15 years, and we believe that trend is going to continue. Okay, third, final kind of mega trend here is the shift to as a service. We do have the word shift in here, and there absolutely is spending shifting from managed services to as a service. But we also think that as a service is growing the pie. So it's not just a zero-sum game. I think that as a service is making the pie bigger for everyone. It is definitely moving some of the slices, but we feel like it's getting bigger for everyone. But just to show how big this market has really gotten, the as-a-service market, it's now 60% of the combined market in the US. It's a little over 40% of the market in Europe, and it's almost 80% of the total market in Asia Pacific now. So just continued unbelievably strong growth in as-a-service. We'll talk a little bit more about that here in just a second. Okay, Chris, let's go ahead and go to the next slide. Okay, so now we're going to talk about, these are now the index results. So we're going to focus on global broader market results. We're going to talk both about quarterly results on the left-hand side and full year results. So if you look at the quarterly trends here, we actually had the best combined market quarter ever at 16 billion, and that was up 13% year over year. Managed services had a $7 billion quarter, and actually we feel like that actually outperformed. It was up 3% from Q3 of 19, even given the pandemic, which we'll talk about here in just a minute. That said, most of that managed services growth really came from Europe, and it was actually almost all in Q4. And we'll talk a little bit more about some of the impact that had on managed services here in just a minute. If you look at the full year results, we're on the right-hand side of the slide. The global combined market was 16 billion, and that was up almost 7%. Again, we feel like that was a really, really good result given the just dramatic and chaotic impact of the pandemic. Managed services was down globally by about 4%, but as I said, we feel like that actually outperformed where we thought it would be given the delayed decision-making and the impact of the pandemic. We had actually forecasted managed services to be down 7% year over year, actually only ended up at 4%, and that was because of these 5 mega deals that were signed in Europe in the fourth quarter. If you take those mega deals out, we actually were almost spot on our forecast, but we ended up about 4% down year over year. And as we talked about just a minute ago, as a service just continues to surge. It was up 17% year over year. Infrastructure as a service actually had its best quarter ever in Q4. So as we continue to see enterprises moving not only existing applications, but building new applications on these hyperscale clouds. Okay, Chris, next slide. Okay, so we're going to stick with global results, but now we're going to look at this by function. So if you take managed services, you break it down into two categories, ITO and BPO. And then you can take as a service and break it down to two categories, software as a service and infrastructure as a service. And that's the data you see here. And this is all on an annual basis. As you can see here, ITO was up slightly in 2019, although it was a record amount of ACV in 2020. And as we talked about, the deal volume in ITO was up 10%, but primarily due to applications. BPO took a big hit in 2020. That was really driven by two things. Number one, we saw a huge impact on the facilities management market. No surprise given the impact of the pandemic and how many of us are working remotely or working from home. Also saw an impact on contact center in 2020, which maybe sounds a little counterintuitive because many contact centers are overwhelmed given the recent surge in e-commerce. What we're really seeing is secular shift in the way contact centers are run, more towards a technology play than a more traditional BPO play. Don't believe that, again, this is more of a secular trend. We do believe BPO will recover this year, slowly, but will recover. If you look on infrastructure as a service, that continues to surge. We actually just finished some research. If you look over the past 5 years, the compound annual growth rate for infrastructure as a service bookings, or ACV, is 40%. So just an unbelievable level of growth in the infrastructure as a service market. And then on software as a service, did see some growth, but it was actually a little bit muted compared to previous years. We think that's primarily due to delayed decision-making because of the pandemic. As many of you are aware, these SaaS systems now, especially the large-scale SaaS systems, so like a Salesforce or a Workday or a ServiceNow, are not just focused on their core anymore. They're focused on expanding outside of their core. These are big, complicated ERP-level implementations now. So we think the slowdown in SaaS is really due to delayed decision-making, and we think that will pick back up in 2021. So that's a really quick high-level view of the market from both a global perspective, annual and quarterly. But before I hand it back over to Chris, just to kind of summarize the key messages here, we feel like the market actually performed exceptionally well in 2021, given the just chaotic nature of the pandemic. Managed services was down 4%, but we actually see some nice recovery happening. We actually see some significant deals in the Americas, especially that didn't sign in Q4 that we think are going to sign in Q1. So we see managed services recovering nicely. As a service continues to accelerate at an even faster pace. We see deal volume increasing while deal sizes are shrinking. And one of the main messages I want to leave you with as you think about this is, the intersection between managed services and as a service is where we're really starting to see a lot of this buying activity happening. And so it's the ability to manage and deploy these as a service solutions on a long-term basis is where we think a lot of that growth, for example, in cloud managed services, is going to be coming from over the next 3, 4, even 5 years. So with that, Chris, I will hand it back over to you.
Great, thanks, Stanton. Appreciate that larger context. I think that's really helpful as we take a look at specific pricing trends. It's always helpful to have that larger context of what's happening in the marketplace. So thanks again for sharing that information. So as we shift over to the price trends portion of the webinar, I wanted to direct our focus just a little bit. As you know, traditional outsourcing contracts contain pricing for each contract year, often with built-in productivity gains over time. It's really what clients expect to happen in a transaction. And obviously, because of the inherent forecasting financial risk, these price declines rarely keep up with the actual market move that we see in the marketplace. And as you can see in the chart shown here, the blue line might represent the expected year-on-year price decline in a contract at contract signing, and the purple line in the light blue range represents the actual price decline that's occurring in the marketplace. And you can see that those prices over time kind of drift out of the market. And one of my favorite sayings that I use is a small percentage of a big number is a big number. So even a 2% percentage points on $20 million of annual contract value, for example, is $400,000. And you want to think about that in the context of what would your client do with an additional $400,000? Would they be happy with the price reduction, or would they potentially even consider spending it on something else from a transformation standpoint, and maybe something that you can offer as a value add and get paid for it? So as we look at these trends, we want you to think about the transactions you have in place and ask yourself, are they keeping up with the market? And if not, how will your client react at the end of the contract when it's time to renew? So at this time, I'd like to turn it over to Andy Sauter. Andy has more than 25 years of combined consulting and benchmarking experience here in ISG. As a director at ISG, Andy is responsible for delivery management of the ProBenchmark platform. And many of you know Andy as he leads our customer support team here at ISG for the ProBenchmark platform. So welcome, Andy.
Okay, thank you, Chris, and welcome everyone from the great state of Tennessee, where in the past 7 days we've experienced 4 seasons: winter, summer, and spring and fall in between. So today I'm really going to talk to you about the pricing trends that we see at a high level, the macro price trends, and then go into detail with some of the key infrastructure towers. Now, this is a topic that could really be discussed for hours instead of minutes. So we'll be brushing, kind of lightly on what's out there and some of the key ones that we're seeing, and then we'll, obviously take any questions that you may have. So looking at the macro price trends, the pandemic is proving to be disruptive. We still have a lot of clients who are still, working from home. The remote work is proving to be sticky. And as a result, it's creating security issues, concerns about how do we keep the physical, the logical security, all of the security when somebody's working from home. It's also accelerating the change of transformation. And I think that can be really said it's been transformed in the course of years, over the course of what really now is about a year of us being into this. So it's really forcing companies to adapt and and really just make sure the changes that are needed to support remote usage and digital transformation and all of the backlogs that are going on with contact centers, all of that is having an impact. On the cloud side of things, again, we're seeing a higher amount of overall spend relative to public cloud and the hybrid cloud. That's continuing to grow. We've got some interesting statistics on that if people are interested. Hyperscaler pricing is published, but what really is not is the actual discounting. So there's kind of a pricing system behind, or mechanisms behind the scenes that a lot of people aren't aware of. And it's really going to be set on a per client basis. And really the last point in this slide before we jump in is really that the transition of and migration of cloud spend is really where the battleground. That's really where providers are fighting for business, and that's really where you can differentiate yourself in the market. It's also kind of the higher margin part of the business. So, just a couple of quick trends. Chris, if we go to the next slide, please. So the first area is really related to workplace. And workplaces, we define it as really going to be end user compute and your service desk. And the first point really is that Office 365 is now widely adapted. And evergreening is going to have an impact on support. It's instead of being project based as far as your refresh cycles, updates, it's really kind of quickly moving through as updates are made to machines. So it's causing the desktop support teams to have to adapt much more quickly. I'm also going to jump down to the kind of the fourth goal, which talks about remote support and the shifts that we're seeing there. As people are working from home, remote support, which really used to be kind of the worst case scenario from a support standpoint, it's become the new norm. And so people are becoming used to having laptops shipped. They're used to having, remote support, somebody coming onto your desktop and kind of driving the changes. What this is doing is it's causing the desktop support organizations to actually, have more efficiencies, right? Because when you're dealing with remote support, you can actually handle more clients. And we've seen in many corporations now that have internal desktop organizations that they're actually kind of downsizing as a result of that, cutting costs or getting efficiencies. And we think that's really going to prove compelling from an outsourcing standpoint that, if you were holding on to that, as you start to have, lower support costs, that becomes more compelling to outsource. So we think it might be a market that is going to be ripe for some change. The lines are blurring. So what we're seeing here is contracts are becoming on a per user basis. So clients want simplification. They want I want to pay for one user for both service desk and for my end user support. It's starting to emerge. It's not quite taking hold across the board, but we think that's going to actually change. And you can see as you look at these charts on the lower right-hand side, we talk about the pricing changes, and this is really what we expect to see, or we've seen from 20 to 21. And you can see this kind of slowed down a little bit. Service desk was actually on the rise, and we think that's actually going to stable and maybe start to decrease as we continue to see more efficiencies with chat, with email. Chris, next slide, please. So compute and storage, really few key trends we're seeing here. And when we talk about the mainframe, again, labor shortages have always been in play for the last few years. We're actually seeing the market for providers who want to take on more mainframe business starting to thin. We've seen some that have announced they're not going to take on new contracts, so they're not going to do that. So what's happening is that space has become, less and less players in it. Pricing here has been pretty stable. It'll be interesting to see what the impact of CA's price increases for their tooling is going to have on this part of the business. We expect that's going to be passed on to clients and may create some upward pressure on this space. Looking at the server and the compute side of things, we're starting to see, we see steady declines in pricing for Windows and Unix. What we are seeing are for Windows and Linux, excuse me. For Unix, we're starting to see a little more steep price declines, and I call it the mainframe-like state that it potentially is going to enter into. And bear with me when I talk about this one, but basically the workload or the business case to move workload to Unix is not as compelling as it used to be. And if it follows the same trends of mainframe, we expect that there'll be the skills availability will start to drop, demand for services will drop, and eventually get to a point where whatever has to run Unix will stay on Unix. And then that will stabilize pricing. And then we'll look at labor costs and there'll be shortages, and that will actually start to kind of stabilize the pricing. But really the business cases just aren't there anymore for pushing work onto that platform. So there's really more to see as far as what's going to happen with Unix. On the cloud side of things, it's the migrations affecting the overall server inventories that we see. Providers are proving themselves to be differentiators with asset management. So how effectively are you keeping up with what's out there as you're spinning things up, spinning them down? How effectively are you doing that? The other piece that's differentiating is really going to be, as I mentioned, the migration and helping people manage that. That's an important distinction. We're seeing that some of the providers are having problems with distinguishing themselves in the private cloud, hybrid cloud, trying to figure out how do they make themselves different in that space. And lastly, it's really the important thing that we would expect to see from the providers out there is how do you distinguish yourself when it comes to moving things to the cloud. And a lot of companies are looking at moving to the cloud, and they'll say, I moved an application from my on-premise to to a cloud instance, but they didn't make any other changes. And that's really not what moving to the cloud is. It's really re-architecting your systems for scalability. And that's the difference between, moving to the cloud and, cloud washing, as they would say. And finally, on the storage piece, we're seeing that the pricing is actually starting to flatten. And I put the word finally. I feel like every time that I've gotten on these calls and talked about storage, the double-digit decreases are just scary. You get to the point where I had once somebody said, "What's going to be free?" They're going to give away storage. What's interesting about this trend is that storage is often an area in a contract when you do a renewal or when you're bringing on a new client that you can be very aggressive with your pricing. And so you can see the price declines knowing that you're going to make that up with the growth, right? And if it starts to flatten and growth continues, the perception will be that it's very expensive, right? Storage is getting more and more expensive, and you won't have the ability to drop that down without shaving margins down. So it's going to present challenges to providers to say, how do we manage the growth, and how do we keep the amount of storage at a minimum, if that's possible? And I think that's going to be an area that will prove to be challenging for the market out there. So, Chris, next slide, please. All right, so really next slide talks a bit about network and kind of what's going on in this space. And this is interesting because if you look at traditional network, it really included voice, it included all of your WAN, included firewall, security, et cetera, et cetera. And I think what we're going to see in the network is going to start to peel, things are starting to peel off of what considered to be traditional network. First is really the traditional voice services. And we really feel this is going to be kind of the next victim of a pandemic, and in the sense that legacy PBXs and buildings that are call centers that have their on-site PBXs are going to be kind of going to go away. And it doesn't mean that for contact center or call center, there's not a need for call center management. That's always going to be there. But for users like me, somebody who's got, uses a phone, pick up a phone and call somebody without any ACD functions, this is really it's all being supplanted by these and by voice over IP, and really expect the demand to go down for that. The other piece that's kind of separating from network, is really the last bullet, talks through security functions. So firewalls and intrusion detection systems are beginning to peel off this as well and moving to separate security contracts. So really what it leaves you is with your LAN and your WAN management. And we're seeing in this space the move to SD-WAN. Starting to supplant some of the traditional equipment that you see out there. Your Cisco routers and switches, that have remained on your inventories for years, are starting to actually go away. We expect the wireless costs to remain the same. They may not be utilized, but they still need to be maintained. And so we expect that to be, kind of a steady trend. Now, this is, again, just a snippet of what we have available. Topics like AMS and labor and other things we have, lots of information on. And we certainly can entertain any future topics that you want to hear about. But again, this just gives you a sense of some of the key elements. So with that said, I'll pass it over to Chris Patachini to talk about market intelligence use cases. Over to you, Chris.
Great. Thanks, Andy, and appreciate that update. And I'll just put a plug in if anyone does have any questions on other price trends that they're interested in. We can certainly cover those on a separate session, or also you'll be getting a survey at the end of this webinar. And we'd love to hear the topics you would like to hear about. And we'll take that into consideration as we develop this price trend webinar series. So before we move on to the next topic, I wanted to just leave you with a couple of thoughts regarding the use of price intelligence, and recognizing that in your organization, there are multiple constituents and use cases for benchmarking and price intelligence, as shown on the page here. But what often happens is service providers end up using it for just one use case, and it's driven by the individual who is spearheading it. So whether it's early in the stage sales lifecycle or on large deal pursuits or even on the back end for organizations that are inside your organization managing existing agreements, each of those use cases has a powerful return on investment. But what we often find is that there are pockets of investments being made as opposed to a holistic view of pricing. And that's where we think that there's an opportunity for most service providers to think more strategically about price intelligence and service intelligence, because all of these areas inform the other areas. And so I just wanted to keep that in mind as we move on. And then I will just remind folks that feel free to ask some questions. We did have some questions come in here from earlier content, so we'll cover those at the end in the interest of kind of keeping the flow going. But feel free, as you think of questions, feel free to type them in to the question and answer box, and we'll definitely take those up at the end of the session. So at this time, we're gonna move on to the third segment in our webinar here, and we're gonna turn our attention to service intelligence. And with us today is Howard Davies. Howard has more than 25 years of experience in sourcing, operational management, automation, and benchmarking of IT and business services. Most recently, he ran ISG's commercial industry business in North Europe, and now runs ISG Research Services to support clients and providers in that region. I've known Howard now for more than a decade, when he and I started helping service providers with price intelligence in the ProBenchmark platform, and he's now at the forefront of service intelligence and the benefits it brings to both providers and their enterprise clients. So I'll turn it over and welcome Howard.
Thank you, Chris. Can you hear me okay?
Yes, you sound great. Good to see you.
Okay. Very good. Thanks, Chris. Thanks, everyone. Happy to be here and happy to talk to you about some of the areas that we've seen in terms of the service aspects and not just pure pricing aspects of delivering a service. So I want to just cover a few slides with you over the next 10, 15 minutes in terms of what we're seeing, what we think are the new drivers, what things you should be thinking about as we move to obviously a new way of working in the post-COVID world with different expectations, different levels of experience, and to hopefully be able to align more closely to the user side of the business. So I'm going to just start off with a slide here that we've done some research on over the last couple of years, which is kind of a lead into this discussion really, which is why is the service side of intelligence important? Because the impact of not getting that right is frankly that you as a provider risk losing the business with your client. So we did what we call some incumbency research, looking at the advised deals that ISG has been working on, which typically fall into a sort of 1/3, 2/3 mix. 1/3 is typically sole source type deals where we're helping an incumbent renegotiate, but 2/3 of those are fully competitive deals that are and selected through our future source process. And there's obviously a very important statistic from that, which is that where a client finally decides to take a service to market, the impact to the incumbent provider is pretty significant. In 72% of cases, that's those top two bars together, the incumbent, as a result of that competed deal, lost all or part of the service. And in the part of the service, some of the scope went to another third party. But the key point is that a significant portion and in a significant number of cases, the incumbent lost business to that client. So for me, that's a really, I guess, compelling indicator of the need to understand more than just pricing as a KPI. It's also about the experience, the services being received. And so I want to show you some of the areas that we've been looking at in terms of what I would call the general kind of broader service and market intelligence that I think is important in this particular case. So if we go on to look at what I mean by the service and market intelligence as it relates to services, what you can see here is there are sort of four major categories of insight that we provide to the service provider community, some of which you may be familiar with in terms of how an independent advisor like ISG can help with that. And in the four areas, one of the interesting ones is brand intelligence. So there are things we do with providers to help understand the relative positioning from clients of a service provider in its own competitive market. We have what we call a double-blind survey that we do, which is essentially to see how well you as a provider are assessed compared to your peer group of other providers in your space. We do these fully blind, so the client doesn't know exactly which providers they're using, which providers we're asking about. We're truly trying to find some new information to help the service provider understand the brand, understand how well they compare to others. We have another program, which hopefully many of you have heard of, called the Provider Lens program, which has a report called an archetype report. And that report basically gives you a very detailed comparison of the relative performance of you to your peer group. Same kind of idea, showing you where they have relative strengths and weaknesses compared to you. And again, that gives you an insight into how well your own brand is perceived in terms of service delivery to those companies. And then obviously performance reviews, we do quite a lot of these sort of specific targeted reviews on deals that we've advised, because clearly there are many things that influence the ultimate decision to contract with a provider, and there are lots of learnings along the way. So getting insights into where you perform well or don't perform well in services. Of course, price is one of those attributes, but there are many other attributes as well that are equally important in terms of the culture, the ability to articulate the proposition, the differentiation, and so on. That are brought to bear with the client. So important aspects of the brand part of your intelligence program. Second part here is advisor. What does the advisor think in general of you as a provider? This is really through our interactions. We assess our entire client-facing advisor community once a year, typically over the summer. And we review and rate all of the providers that we engage with over the year. And there's 50 or more providers, probably more 100 these days, that we are collecting information on. So that data provides a really helpful insight to know to what degree ISG is aware, understands, trusts, and advocates for you as a service provider to the clients that we serve. And again, that can provide useful insights into other areas that perhaps you need to help develop our insights and understanding to help recommend you with our own clients that we work with. And again, that we do various other surveys to help with that, specific custom surveys, looking at particular topics, again, to try to give you the maximum insight as an advisor firm to help you in your own differentiation. The third leg of this, which of course you heard a little bit from Stanton already, is our market intelligence we put out on the industry. You've already seen some snippets of our ISG index report, and equally, we've just launched the ISG Index Insider program, which, to be honest, is my first place I go now in my inbox to look at the nuggets of what's happening in the market. So again, that's useful industry insight you can get from ISG that supports what's happening in the market and gives you hopefully some indicators as to where you might want to focus your own activities as you're building your industry plans. And again, to complement that, there's a whole series of industry reports we produce. But again, the whole purpose of that is to give you that market perspective on what it looks like. And the last part on here is really to give you to be thinking about how you compete. What are the competitors in your market doing? There are a couple of programs that we're involved in. Star of Excellence is a client-oriented way to recognize achievements of providers. So it's client-led, not providers recommending clients. So we're generally able to share information on which clients are enjoying the services of their providers the most. Gives you a useful insight to see what are the things clients are looking for these days. And I think particularly now as we come out of COVID, there will be new needs, new requirements that clients will have of their providers. And I think, again, that will give some useful insight And then, of course, last but not least, the Provider Lens program. All providers, I'm sure, are well aware of it. It's a really important aspect of how we rank and assess the various providers, and also how we use them in our own long list of providers for our clients' engagements. So some things to think about there as a service provider. And then just to go into the user side, so we talked about an advisor perspective on how to give you some service intelligence. The user experience, of course, is an ever-improving and important aspect of how to manage service activity. And we have a program we run, but I guess the point of the side is there are measures that are even more important now as we come out of COVID and look at new ways of working with more of a work from home focus, which brings about new issues around security, network availability, new ways of getting support. I think it's even more important now to start looking more systematically at the end user side of the business. What are end users requiring from their IT services and service providers that support them in their new doing business? For example, on some of the slides here, the graphics here, we show the degree to which the important attributes around the ways that clients have self-service for their help desk, or whether they use email, how that's been changing, the use of on-site services and the use of things like tech bars, how important they are right now. You can imagine that as companies are moving more to a work-from-home environment, these self-service attributes will become more important in how they can help themselves to fix their problems and gain service, rather than always having to go into a working office environment. This will give you some interesting indicators to track how you want to deliver service in future and how you're going to compare to others in the market, how those services are being received by those end users. So this is really to give you some ideas on how to survey your own end user community through your clients or even for your own organizations, to look at how you compare to the market, to your own peer group of service providers, and to be able to identify where you have what we would class as top quartile levels of performance in terms of how you're supporting users, and where you have a lower quartile performance that can help determine what things you might do differently in the way that you want to support users going forward. So I think this is really to give you some ideas on the kinds of attributes to measure in terms of experience, and to have a kind of graded scheme to be able to report and compare those such that you can highlight those things which have most business impact and those which are going to deliver high performance to your end user communities. So again, just some ideas here for you to think about as you look at the end user experience aspect of service. Then my last point here is, as I started off in this section, clearly it's important as a service provider that you retain and deliver outstanding service to your clients. There are various things you can do to have somebody independently review that to make sure that the key stakeholders in your own client organizations are sure that they're getting the delivery that they're expecting. Again, particularly true now. We are doing many what I would call cherished accounts activities with providers to look at key accounts, understand from the executive stakeholder point of view, so not just the end user experience, but the senior stakeholders' perspective, how well services are being delivered, where perhaps those executives are now looking for new kinds of service. There are new providers emerging or new disruptive players entering the field in this new world we're going into. So it's, I think, even more important now to have a proactive program to understand needs of key accounts, key clients, and to tie in your own service development initiatives to those new needs. Again, the goal here is really to avoid your key accounts having to go to the market to look at alternative ways to deliver their services. So really to avoid that KPI we started off with, that clients should not need to look outside to find new services, but can find those from within, from their existing service provider community. So that is really just to give you some ideas, hopefully some insights and some food for thought as we go into the rest of this year on things that you should be looking out for. So that's it. Hopefully it's been helpful. Chris, I'll pass back to you.
Great. Thanks, Howard. Yeah, very insightful. And I think it's as we look at, opportunities for clients to, at the end of their contract renew, the combination of service intelligence and understanding, is the client happy and are they getting a good deal, are two elements that when we bring those together is really powerful for provider success. And the providers being successful means also that enterprise clients are successful. Because if you're in the middle of trying to renew a contract and it goes competitive, that the client is spending just as much time in the competition as you are on bidding the services. So it's really a win-win, for service providers to get ahead of the curve by making sure that their clients are engaged and happy with the service and the pricing that they're getting. So before we head into the Q&A, and by the way, if you have any additional questions, feel free to ask those. We've got a few that have come in the door. Before we get there, I just want Stanton maybe to talk a little bit about a new capability that we have, and Howard kind of mentioned it, the Insider. So let me turn it over to Stanton just to talk a little bit about that as well.
Sure. Thanks, Chris. So if you're anything like me, you are utterly overwhelmed by information. And I know many of us feel that way today. We have a number of devices and all these sites we're visiting. And so it's really hard to consume all this information. So that's really the idea around the weekly ISG Index Insider, as Howard just mentioned, is to be able to provide our enterprise clients, our service provider clients, technology vendors, the investment community as well, really that attendance that we talked about on the index call, a way to get access to that information in 5 minutes or less. And so this Insider, something's relatively new. We just started about 6 or 7 weeks ago. Feedback so far has been tremendous. And so my hope is that you'll consider subscribing to the Insider. You can see the link here. The link will also be, or the slide will be in the presentation that you'll get after the webinar. So the Insider really focuses on key deal activity, M&A activity, leadership changes, regulatory policy changes that may impact our industry. We also have a data watch section. So we've talked a lot about some really cool price intelligence data today, as well as some index data. That's just the tip of the iceberg. So what we're trying to do each week is highlight some interesting data that's new and fresh that will help you to make better decisions as you go forward. So I encourage you to sign up. If you have any questions, any feedback on it, my name is in there, publishing that each week. So feel free to shoot me an email, and I'd love to talk to you more about it. Chris, back over to you.
Great, thanks, Stanton. And at this time, we'll move into the Q&A portion of our webinar today. We still have a few questions that we didn't answer as in the thread of the webinar as they were coming along. So we'll go ahead and answer those. The first question came in that we haven't answered is, do we have a percentage of how much the customer price is too high after year 2 compared to the target market price? And the answer is that there really isn't a percentage that a client would say is too high. And, as you can imagine, clients, even a couple of percentage points over time make a big deal for some of these transactions. Our experience in the monitoring service that we offer is that transactions are moving out of market at the rate of about 2 to 3% a year. So by year 2, it might be a little bit of a market shift. If you've negotiated, if the client has done well negotiating, they're probably a little bit below market when they start. So by year 2, they're competitive to the market. By year 3, they're above market. And really, when you get to year 3 or 4, that's where you start to see the gap. And that can be as high as 5 or 10% above market. And that becomes a significant gap for most organizations. And again, it depends on this, 5% of a big number is a big number. So it really depends on the organization and what they could do to redeploy that spend. So there isn't a single answer there, but we do see, and the problem with some organizations is they get to the end of their agreement and they realize that they're 10 or 15% out of market. And they're almost disappointed with the service provider who hasn't innovated or brought price concessions to the table as a way to help continue the relationship. And so that can be a significant problem for organizations. Another question came in is that, as someone pointed out, ISG helps service providers with creating a funnel on the front end, and that's certainly correct. Howard spoke to that. The question here was, do we see any negative shifts in any geography year on year, and maybe specifically in the ANZ region? So I don't know, Howard or Stanton, if either or both of you want to take that question.
Sure, Chris, this is Stanton. I can take the, in terms of kind of our forecast, I can take that, then I can pass it over to Howard for any more qualitative he wants to add there. So in terms of our forecast, so we are forecasting 3% growth in managed services for 2021 and over 20% growth for as a service in 2021. On the managed services side, that 3% growth, and this is global, is slightly muted, but that's really kind of a few factors. Number one, we feel like obviously there's still sort of an uneven recovery from COVID as, the vaccine gets deployed across the globe. It's getting deployed at different rates across the globe. So we think there's going to be sort of a muted recovery there. There's actually kind of a tough compare. So Q4, as we talked about on managed services, was actually quite strong. So don't know exactly what that compare is going to look like in Q1 or Q2. And also, it's important to keep in mind, there was some significant acquisition and spinoff activity in Q4, and so that's going to delay some decision making. So as we look at the market, we're looking at bookings, so we're looking at sales by each quarter. We think that is potentially going to depress some buying activity into 2021. That said, our overall view is that the managed services market is absolutely recovering and is going to grow, just not as much as it traditionally grows. In terms of the regional breakouts, so we do forecast growth by region. We actually don't publicly release that. That's part of our commercial relationship. So if that's something you're interested in, please feel free to follow up with me or Chris after, and we can talk about that. That said, I think you did have questions specific to Asia Pacific in terms of the backward-looking results. I'm actually looking at the data right now. So for the combined market in Asia Pacific was up 35% in Q4. So that's a quarter-over-quarter compare. So it was actually a record for the combined market in Asia Pacific in Q4. Managed services had its best quarter ever in the year. And as we talked about, as a service is almost 80% of that combined market in Asia Pacific. So if you're interested in more detail on kind of the forecast side by region, please reach out. I'm happy to chat with you about that.
Yeah, and I would just add, Stanton, more in terms of the kind of nature or how providers have been working, we certainly have seen, and I'm focused mainly on Europe, so I guess you should bear that in mind with my comments here, but certainly when the pandemic first hit, we saw a lot of short-term impact on cash flow and how clients could help with that and how providers could help with that. So that was certainly one of the symptoms we saw and one of the opportunities, if you like, for providers who were in a strong cash position to help with their clients through those early months. We also saw providers looking at captives as a potential opportunity for them if they were able to help clients who had a distressed financial performance and were looking for ways to monetize their captive operations. I think we saw a short-term spike over the summer last year, at least from a European perspective, on companies looking to see if there are ways that they could target companies on that basis. I think that probably reduced in the latter part of last year, and it was more around getting back onto the sort of deal cycle. Interestingly, we did actually see the volume of deals we were involved in went up, at least for Europe, but they were smaller deals. And I think there was also a tendency for clients to stay with their incumbents, at least during last year, in terms of the way they wanted to work. But I think certainly in the last few months, we have seen in Europe that clients are now more open to look at the competitive landscape again. The work has been, I'd say we have seen more work in the more strategic aspects of the sourcing landscape. Who are the emerging players? Who are the disruptive players? So I think there's been a lot of sort of latent demand that's now been unleashed from clients on the market, and I think that creates a lot of exciting opportunities, certainly going into this year. So I think I definitely support Stanton's comments on the market projections that we now have. And I think activity from the clients in using advisors and looking at other competitive opportunities. So that's what I would.
Great, thanks, Howard, and thanks Andy and Stanton as well for providing your insights here. I know there's a few other questions that we can follow up with directly with some individuals that have been posed here, so we'll take those on separately. At this time, I'll close out the session and thank you for your participation in our webinar, and feel free to reach out to any of us with any additional questions. And just as a reminder, we will follow up with the content from today's session, the slides specifically. We'll be distributing those out as well. And we'll also make the stream available if you want to share within your organizations for any other folks who might be interested in the content. So thank you, everyone, and I'll turn it back over to Jillian at this time. Thanks.
Thank you, Chris, and thanks to all our presenters and attendees. This does conclude our time today. We really appreciate you joining this ISG Smart Talk. If you have any questions or would just like to get in touch, you can find us at www.isg-one.com. Thanks very much for joining.